GBPUSD just spiked to the upside, and it now looks like we're dealing with a false breakout. So GBPUSD, we've been watching this for a couple of weeks. We said we have a very nice double top with a high here in September and another high here from April 29th. And when we usually break these kind of double top formations, then the difference between the low of the pattern and the neckline gives us a target. And that suggests we can push up by 1,326 pips. And normally when this would happen, I would go long on the breakout point and then stop loss just goes below the daily candle. Now, as you can see, this is not looking too good. This looks to be a false move, at least for now. And then if we were close like this, we're probably going to be at these levels tomorrow. But it's not game over yet. And we might have another attack before the end of the day, or maybe tomorrow, unless we don't have that slide, which seems to be quite likely. And why would we have that type of push? The reason for having this type of push is that inflation has risen sharply in the UK, and much higher than expected, came in at 3.5%. And this is a real difference. It's much higher than the peak we saw in January. We were at 3%. And just before, now in March, we're at 2.6. Now, the reason for this happening is that we had quite a few anomalies. So firstly, we had an increase in road tax, which is contributing to this, and that's a one-off as well. The timing of Easter is complicating things. So for example, holiday packages and flights prices there have risen by 28% on the month. But this is more to do with seasonal effects rather, and the timing of Easter, rather than something that is sustainable. Even though, imagine we ignore all these details, what can we learn from this? We can learn that inflation is just way too high in the UK, and the Bank of England is anticipated to cut rates once every quarter, but this obviously lowers that for a little while. While in the US, the market is pushing for maybe having a rate cut in July. So all in, if we look at all this and ignore the details, inflation at 3.5% is way too high for England and the UK. So probably no rate cuts right now. And in the US, maybe opening up for a rate cut. So I would say if we push above here, then maybe we'll get that genuine breakout. Even if we don't necessarily go all the way up towards the target, if we go to the target, we'll have a very aggressive risk-reward ratio of 18x. Probably way too much. But even if we go to something more modest, like a 300 pip move to the upside and reach 138, then your risk-reward ratio is 4.8, which is very good.